Hi, this is Alan from Alpus Group, and I'm going to talk to you today about a 7-step plan for joint venturing. Now this is a step-by-step process which you can follow with Alpus Group, and it essentially starts with preparation for the deal. So what we do and what we would expect is for the deal to be identified. So you're looking through a lot of property transactions which are not deals, because a lot of these sites that are offered don't stack up in terms of developments. But what you're looking for is the profitable deal that will secure an increase in value for the property owner and a return on investment for the property investor and a profit for the developer. So there are 3 ingredients. There is the property owner. You need to secure the property from them, either control of the property or purchase the property. It may be subject to planning permission, or you may have permitted development rights. But essentially you need an investor to help you to secure the property. And the investor needs to see that he will get his investment back as a first step, and that also he will get the interest on the deal as well. So if you're offering an investor a participation in a deal that would produce maybe 20% plus profit, you might be securing capital from him at 10% return if it's a simple loan. Alternatively, the investor may be in joint venture with you, in which case you may decide to share the profits from the deal. So there are 2 alternative ways of doing it: a simple interest loan or a joint venture arrangement where risk and reward is shared. But that's the preparation. You're going out as the developer, you're identifying the deal, and you're presenting an opportunity to the property investor. So you need to prove that concept. So you need to stress test it at different interest rates. You need to stress test it if the design and construction costs increase, or the time becomes prolonged and the interest rates therefore go up. The finance charges are effectively eating into the profits. Prove the concept to the investor so that he is convinced of the viability of the deal. Step 3 is network. Your network is your net worth, and potential investors are probably located within your existing contacts, at least some of them. Friends and family are the first place to start, and the question, who do you know who, may well produce some interesting results, such as people who you have never suspected had money, but that they declare that they may have some funds saved away which they're prepared to invest. And you can offer them the opportunity to make more money. Fact finding, step 4. So you've got a list of potential investors who you've identified from your friends, family, contacts, work colleagues, ex-work colleagues, and you've got a series of sums of money that they may have available. So what you need to do is build desire in your list of potential investors, and seek out from them, are they available? Have they got the funds available to participate now? Because you need to get the deal secured, and to do that you need investor funds. So you can talk to the investors, you can even give them a dummy deal just to see if they've really actually got the investment funds available, or if they're just saying, well, yes, I've got money in theory, but it'll take me 3 months or maybe longer to release the money from where it's tied up. So once you know who your real investors are, they've got funds at hand in an account which they can show you, then you can seal the deal for the purchase. So you know you've got a real deal, you've got pre-qualified investors who are going to provide the funds to enable you to conclude the transaction. You can seal the deal with the vendor, or possibly you're joint venturing with the owner of the property. and you need to be able to convince everyone concerned that you've got the capability to actually deliver this deal. And then step 7 is to actually deliver and repeat, because if you deliver the deal, you perform the transformation from a lower level of value to a higher level of value, you create wealth, you create profit, you return the profit to the investor, you sell the units on for the profit for your company, then in fact you've got a satisfied investor who has a bigger problem because he's got more funds which he needs to find a home for, and he probably may not want to put them back in the bank at a low rate of interest. He may well want to reinvest them with you, particularly if you've turned his funds around quite quickly and got him a better rate of return than he could have got anywhere else. So this is the 7-step process for joint venturing, and I'm going to talk more about that in future videos. But if you are interested in this concept, you're a property owner or you're a property investor, and you would like to participate in such a joint venture, we've got a number of projects which we've got ongoing at the moment, and we can talk to you about possibilities for future projects. All you've got to do is call me, that's Alan at Alpus Group, on 07539 141257 or 0333 224 1257. You can add +44 to those numbers if you're calling from outside the UK, so it's +44 7539 141257 or +44 333 224 1257. You can schedule a call with me at calendly.com/AlanJE, or you can drop me an email at alan@alpusgroup.com. That's all about joint ventures for now. Cheers.